The IRS just added AI to their 2026 Dirty Dozen scam list for the first time ever. And right now, your accountant might be passing your financial data into the same free tools the IRS is warning you about. AI in accounting isn't coming, it's already here. The 4 biggest accounting firms in the world have spent over $6 billion on AI in just the last 2 years. Deloitte alone committed $2 billion, PwC committed $1 billion, and became OpenAI's single largest enterprise customer, rolling out access to over 100,000 of their people. And across the entire profession, adoption has quadrupled from 9% to 41% in a single year. But here's what no one's explaining to business owners like you. There's a massive difference between a firm that uses AI wisely and one that's using it recklessly with your data. By the end of this video, you'll know exactly what's real, what's hype, and 3 red flags that should make you seriously question whether your CPA is handling your information responsibly. I'm Jeff, co-founder of Proseer. We help business owners keep more of what they earn. And yes, we use AI to do it, but we do it with guardrails. And that's a distinction that means a lot more than you think. So let's start with what's actually happening right now, because the reality is more interesting than the hype. AI is changing accounting fast, but it's not changing the part of accounting that actually matters to you. It's changing the boring stuff. A Stanford study found that accountants using AI finalize monthly statements 7.5 days faster and get 12% more granularity in their reporting without sacrificing quality. BDO, one of the largest mid-market firms, reported that their internal AI tool saved over 1 million hours and boosted time spent on client-facing advisory by 74%. Think about what that means for a second. That's not about replacing the accountant. That's about giving the accountant their time back so they can actually think about your business instead of just doing tasks for your business. And that's a shift most people are missing. For years, accounting's been stuck in this cycle. Your CPA spends 80% of their time on data entry, transaction coding, reconciliation, pulling reports, the mechanical work. And then they squeeze in the actual advisory, the strategic conversations about your tax position, your entity structure, your cash flow planning, into whatever time's left over. AI is flipping that ratio. When the mechanical work takes minutes instead of hours, your accountant stops being a processor and starts being a proactive partner. But here's what's even more important, because it's not just about your accountant's time, it's about your experiences as a client. Think about what working with a great accounting firm should feel like. You shouldn't have to chase down your CPA for updates. You shouldn't be sending 6 emails back and forth to get a simple question answered. You shouldn't be waiting weeks for a report that could have been turned around in days. When a firm uses AI well, the entire process gets smoother from your perspective. Your onboarding is cleaner because AI can organize and categorize documents as they come in. No more back and forth about which file goes where. Your monthly reporting is more detailed and more consistent because AI catches anomalies and patterns that a human doing manual data entry at 11 p.m. might miss. And your financial data gets reviewed continuously instead of in one big crunch at the end of the quarter. And the questions your accountant asks you start to change. Instead of calling or emailing you to clarify a transaction or ask for a missing receipt, they're calling you to say, hey, we notice your margins dipped 6% in Q2 compared to Q1. Looks like it's driven by a spike in contractor costs. Here's what we think you should look at. That's proactive. That's advisory. And that's only possible when the firm has the bandwidth to actually look at your numbers with fresh eyes, instead of being buried in the process of getting those numbers onto a spreadsheet. At our firm, that's exactly what we're building. We use AI to analyze client data, pulling trends, anomalies out of thousands of transactions in minutes. That used to take hours. We build custom workflows for our most complex clients, purpose-built for their business, so the repetitive work runs on autopilot and our senior team focuses on strategy, planning, and making sure nothing falls through the cracks. The result for our clients isn't just faster accounting, it's a better experience. Fewer emails, fewer surprises, more insights, and more time with a senior advisor who is actually thinking about your situation, not drowning in your data entry. But if your accountant is using the free version of ChatGPT with your financial data, you need to know something. Free consumer AI tools, the ones that anyone can sign up for without a credit card, use your inputs to train their models by default. That means your revenue numbers, your tax documents, your cash flow details, all of that could be absorbed into the system. And it gets worse. A federal court recently compelled 20 million ChatGPT conversations as evidence in a lawsuit. Consumer AI tools are now discoverable in legal proceedings. Enterprise AI tools, the paid business tiers, are a different world. your data isn't used for training. You get encryption, compliance certifications, and contractual data processing agreements. And some firms go even further, running AI on their own private servers so your data never leaves their infrastructure. It never touches a third-party cloud. It stays exactly where it should. When it comes to your financial data, the difference between consumer AI and a secure setup isn't a technicality. It could be the difference between protected and exposed. Now here's where it gets interesting, because the risks aren't some theoretical concern. They've happened, and they've happened to the biggest firms in the world. Deloitte, one of the largest accounting firms on the planet, had to refund a government client almost $100,000 after submitting a report that contained completely fabricated quotes from a court judgment and references to academic papers that don't even exist. The AI made them up, and nobody caught it before it went out the door. Then it happened again with a $1.6 million healthcare report for a different government. That one contained at least 4 fabricated citations. An accounting watchdog opened a formal investigation. And that's Deloitte, with all their resources, all their review layers, all their compliance infrastructure. Now picture a small firm with no AI policy, no review processes, and a junior associate copying tax guidance from ChatGPT and dropping it into your work product. The IRS has noticed. The 2026 Dirty Dozen list specifically warns that taxpayers should not rely on AI for complex tax questions, and for good reason. Independent testing found that AI chatbots give wrong or misleading answers roughly half of the time on complex scenarios, a finding cited by the US Taxpayer Advocate Service. One CPA who tested international tax questions found the AI gave incorrect answers 100% of the time. It fabricated claims that the US had treaties with countries it doesn't. It invented exceptions to filing rules that don't exist. And in the courtroom, this matters too. In a 2024 New York case, a judge tested the same AI damages calculation on 3 separate computers and got 3 different numbers. He threw out the expert testimony entirely, calling it inherently unreliable. So the pattern is clear. AI is powerful, but without proper human oversight, it produces confident-sounding answers that can be completely wrong. And the people using it may not even realize until it's too late. And here's the part that should really matter to you as a business owner. Your CPA is still legally responsible for every piece of work they deliver, regardless of what tools they use to create it. There's no AI defense. No, the chatbot did it excuse. If they send you something wrong, it's on them. And if that wrong thing ends up on your tax return, it's on you. Which brings up an uncomfortable question. If your accountant is using AI without guardrails, who's really absorbing the risk? You are. Will AI replace accountants? Let's not sugarcoat this. AI is already handling work that used to require a human being. Transaction coding, bank reconciliation, document extraction, basic compliance. That work is being automated, and the firms still doing it manually are falling behind. So if your accountant's main value is data entry and number crunching, yeah, that role is in serious trouble, and that's real. But here's the other side. AI still can't do the work that actually moves the needle for a business like yours. Multi-entity tax strategy, structuring a deal, advising you on whether to take a distribution or reinvest, planning an exit, navigating the gray area of the tax code where the answer is, it depends, and getting that judgment call right. The accountants who learn to leverage AI, who use it to handle the volume so they can focus on the judgment, those are the ones becoming worth their weight in gold to business owners like you. The question isn't whether AI will change accounting. It already has. The question is whether your accountant is evolving with it or getting left behind. So what does all of this actually mean for you as a business owner? It means 2 things. First, you should want your accountant to use AI. The firms that are embracing it responsibly are delivering more detailed work, catching issues sooner, and spending more of their time thinking about your strategy instead of drowning in your data. From your side of the relationship, that shows up in ways you can feel. Your reports are more useful, your advisor is more proactive, the whole process from sending your documents to getting insights back feels tighter and more organized. You're not chasing, you're not waiting, you're getting ahead of problems instead of reacting to them. Second, you need to know how they're using it, because the gap between a firm that does this well and a firm that does it recklessly is getting wider every single month. And the best way to find out? Ask some pointed questions. Here are 3 red flags that your accountant might be using AI irresponsibly with your data. Red flag number 1, they have no AI policy. If you ask how they use AI and you get a blank stare, that means nobody has thought about where your data goes when it gets typed into a chatbot. No policy means no guardrails. And no guardrails means your financials could be at risk. Red flag number 2, they can't tell you whether they're using consumer or enterprise tools. This is a big one. Consumer AI can train on your data. Enterprise and self-hosted AI tools can't. If your accountant doesn't know the difference, or worse, they've never even considered it, your financial information might be floating around in a training dataset right now. Red flag number 3. There's no human review step before work reaches your desk. AI hallucinates and makes things up. It sounds confident when it's completely wrong. Your CPA is still legally responsible for every single output. And if they're sending you AI-generated analysis without a qualified human reviewing it first, that's not efficiency, that's a liability waiting to happen. Ask your accountant these 3 questions. The answers will tell you everything you need to know about whether your firm is ahead of the curve or quietly cutting corners. Disruption in accounting is real. The accounting profession is dealing with a workforce crisis right now. Over 300,000 accountants and auditors have left the profession since 2020. That's a 17% reduction in workforce. CPA candidates have dropped by a third. Only about 1% of college students are even choosing accounting as a major anymore. So the talent pool is shrinking, but the complexity of what business owners need from their advisory team is growing every year. AI is going to reshape this profession. Some roles, the ones built entirely around manual processing and data entry, will shrink, and that's already happening. If the only value an accountant provides is compiling numbers, AI does that faster and cheaper, and that's just a reality. But the accountants who can learn to leverage AI, who use it as a force multiplier for their expertise, they become incredibly valuable. They're handling more clients without sacrificing quality. They're catching things sooner. They're spending their time on judgment and strategy instead of mechanics. And the clients of those firms, they can feel it. The communication is tighter, the insights are deeper, and the experience is smoother because they're working with a team that isn't buried under a pile of manual tasks. They're actually present, actually thinking, and actually looking around corners for you. That's the future. The accountants who embrace AI and pair it with real expertise, those are the ones who will be worth their weight in gold to business owners like you. The ones who don't, they're gonna have a very hard time keeping up. That's all for now. Thanks for watching. If you like this video, please share it with someone who might benefit from it, and make sure you subscribe. We're sharing videos like this all the time. Talk to you soon.